who is Irmaa and how she is messing with our Social Security benefits? Well, unfortunately, Irmaa is not just a nasty aunt whom you can say, "Hey, Aunt Irmaa, go away, please." Irmaa is an income-related monthly adjustment amount on Medicare Part B and Part D premiums. So who pays Irmaa? People with higher income earners pay Irmaa once they enroll in Medicare Part B, and if you are enrolled in Medicare Part D, you pay Irmaa Part D surcharges as well. What if you are in a Medicare Advantage plan? That's Part C. Well, some Medicare Advantage plans have Part D components, and therefore, those people are subject to Irmaa too. This income, like for a couple who are married, filing joint, if you are one penny over $218,000, then you will be subject to Irmaa. Please note that the system is a cliff system. Unlike taxes, with your income, your tax increases progressively. Here, you see, they even tell you $218,001, and you are subject to Irmaa. And the Irmaa in 2026 is $95.75 total for Medicare Part B and Medicare Part D. What's included in this income? It's modified adjusted gross income. What goes into this income? Well, it's basically your 1040, line 11. What's included there? Your earnings, your pensions, your distributions from your IRA, 401ks, all the retirement plans, your interest, your dividends, capital gains. Taxable portion of your Social Security income is included in modified adjusted gross income, plus tax-exempt interest. Those treasury bonds and municipal bonds that people buy in order to avoid taxes, that interest is included in calculation of modified adjusted gross income for your Irmaa. That's before the deductions. Deductions don't matter. That's in determining your taxable income. This is the income for income-related monthly adjustment amount. What can we do to fix it? If you live in California and if you have pension, if you have decent Social Security, if you have a sizable tax-deferred account, by tax-deferred account I mean 401k, 403b, 457, any plan which starts with number 4, IRA account, you probably at some point will be paying Irmaa. And how is it calculated and how often? Well, Irmaa trustees gather every year to decide on Irmaa amount. Let's look at 2025. Like if you saw in the table I showed, they looked at 2024 income to determine 2026 Irmaa. Why is there a 2-year look-back period? The 2025 taxes are due by October 15th, right? But many people file extensions, and the deadline for filing taxes for all responsible citizens is October 15th. So we can count that by October 15th of 2026, everybody will file their 2025 taxes. Then trustees, Medicare trustees, will gather after that date. They will look at their budget. They look at the potential victims who is going to pay Irmaa, and then they will decide if their budget is sufficient, so no changes are necessary. The budget probably will not be sufficient, right? So then they will make the adjustments. On average, every year, Irmaa has been increasing by 5 to 7%. Unfortunately, we don't have numbers for 2027 yet, but we do have numbers for 2026, so you can look what has been used, what Irmaa amounts are right now, and increase it by 5 or 7%, so you will get a ballpark number, an idea what is going to happen next year. What can you do? How can you avoid or minimize Irmaa? As I said, even tax-exempt interest, some of it is included in your modified adjusted gross income calculations. However, distributions from Roth IRAs and Roth 401ks, Roth accounts, are not included in the modified adjusted gross income. Neither are loans from life insurance retirement plans. So you can reallocate to these tax-free types of accounts. Warning, this move will cost you taxes in current year, in year of reallocation. And if you are at least 63 years old, then this move could push you into the tier where you need to pay Irmaa. But this is only for 1 year. If your income reduces next year, then you will not be paying Irmaa again. And that's what brings the next point. If you are enrolling in Medicare, like 65-year-olds, when you turn 65, you enroll in Medicare. If in 2026 it is determined that you are subject to Irmaa based on your 2025 income, then you will get a letter. Dear Mr. and Mrs. Savers, your Irmaa is coming to visit you in 2027. So you will know and you can get ready. Why does this warning help? Well, this warning helps because sometimes we have unfair situations. Like, let's say at 63, a lot of people still work. And they have good salaries because they are valuable, experienced employees, right? And they get bonuses and they get other perks from their employers. Maybe, sometimes they ask them to retire a little bit early and they get like a bonus to retire. So many people have higher incomes at 63 than they have at 65. And many people even might be under this threshold. Right now it's $218,000. So many couples might be below that amount. But 2 years ago, they were earning a lot of money, so they are subject to Irmaa. You can dispute, you can appeal. There is a special form, SSA 44. You can Google it. And it's a fillable form. You download it right from the website. You fill it up and you can fax it to Social Security Administration. You can mail it to them, you can email it to them, or you can schedule an appointment and come in person. We highly recommend to file it in person. If you want this form emailed to you, you can do that. If you need help filling it out, please reach out. Our information is below. Just reach out and we'll be happy to help. Before I forget, if you found this video helpful and informative, please like it, click the like button below, and please subscribe. Every like helps us a lot, and if you subscribe, you'll be notified when we upload more useful information. Thank you for watching. This was Irina Hill with Serenity Wealth Management.